This one single candle is all you need in trading. A full strategy, entry, stop loss, and take profit is all based on this one single candle. It works on all pairs, anytime, and all time frames. In this video, I'll cover everything you will need, the basics, the steps, examples, and how to focus only on high probability conditions for a better win rate. Let's start. Now, this one single candle can actually give you the direction. So the moment that candle prints, it's an automatic direction. The entry will be inside the candle and stop loss and take profit will be around it. So the stop loss, if it's a bearish candle, it's going to be above it. And if it's a bullish, below it. And the take profit will be away from it. And the same with all the setups that I go over. This is going to work in all pairs. So NQES, gold and silver, euro dollar, pound dollar, and most of the forex pairs, even the cross pairs. And this will also work any time of the day. So if you're trading Asia, London, or New York, you can still trade based on this. It's a universal pattern that also applies to all time frames. And we'll be discussing the time frames used and the time frame alignment. Now, the first thing I want to do is look at these three, and I want you to focus on one at a time. So for example, this one, is the specific pattern better to trade than this one here? Or is it this one and this one? Which one is better? But I want you to leave your answer here. So is it 1 or 2 or 3? You can answer in the comments. There are 3 things that the last one had that the first 2 didn't. And that's why the third one is actually the one that I can trade, and it's the highest probability one. Now, the first one out of these 3 is weakness or liquidity. So liquidity sweep. Now, if we zoom in here and we notice that at the beginning of that, now this is a flipped one. So this is in a bullish scenario. You can flip that pattern. Now, in this case, what we can see is that in the lower time frame, and that's something that we're going to go over on details on the examples. So if it was a bullish scenario, then we would have a candle that is bearish and then a candle that is bullish. But when we look at the wicks, that's what we'll be having, a weakness here. This can be seen on the low time frame as this. So we have a low, price pushing higher, not being able to displace and then go lower, and then we have a weakness. So there is a weakness at the lower time frame. Now, if what you actually need is a strategy, what if your full plan is just a wick? Now, this wick here is going to give you the direction, the entry, stop loss, and actually everything you need just based on one wick, and it's a high reward to risk setup. And the edge model is universal, meaning that it works in most pairs and most time frames. So if you think this is right for you and what you actually need, make sure to check out Edge School. These are some results of the people inside the community, and these are some of the classes. Let's continue. And the other 2 is momentum and breaker structure, and it's all about speed and structure. And actually speed is what's more important here, because you could have that pattern, that specific one, but happening in multiple candles other than one candle. Now, in this case, what you notice is that the moment we have a weakness, what happened is we did not take our time going higher and higher and higher, slowly grinding to the high to break structure. No, it all happens within 1 or 2 candles on the low time frame. So that was a quick one. And now it could be multiple ones on the higher time frame. It's only a 2 candle pattern, and our candle, this one here, breaking structure, so this one actually goes higher. There is a big difference between this and this, going slowly higher to break the high in this case. So this one I would say is the most important signature on this pattern, which is speed, which is momentum, that we have the weakness and the breaker structure is all happening within 1 or 2 candles. That's it. Now that's how it's seen. This is the directional candle, this one here. Now I've covered this on the rectangle method when we use the directional candle with the rectangle. In this video, we're going to be covering more different entries, not just the rectangle method. So this one is more universal and not specific to a scalping setup. No, it's more universal. So we can use this in multiple different ways. Now, in this case, we have this candle going higher, this candle going lower. But notice how strong this candle and how we had the weakness happening only here and immediately reversing. Now this is a higher time frame and this is a lower time frame. Notice how we go higher, we had a high pullback, and then immediately in with just one candle, which is here, the second candle, we had a weakness and a breaker structure. So simply price reaching a level and then immediately reversing, and not just reversing slowly but strongly and with a momentum. That tells me that this candle is very strong. Now this tells me that this candle is a high probability one, and it's a strong candle that a lot of the time will be having a continuation from later. And we're going to be learning how to do that. Now, what can you do with this one candle? And before we cover that, there is actually one thing that if you do not apply the right way, the directional candle will not work. And I'll be covering this after the examples. So stay tuned at the end of the video, because if you don't do this one thing, then it's not going to work. I'll show you different ways to use it, different levels and different strategies, so you know how to actually apply it to your own specific strategy. So you don't need to switch this. It's a simple concept that you can apply to your own setup, and it's going to be making a big difference. Now, the first thing is we need to decide our higher time frame and lower time frame. The higher time frame will be responsible for the directional candle. So the candle that we've been talking about, you're gonna look for this on the higher time frame. And the lower time frame will be your own key level or entry. Now, we're gonna be covering a lot of different examples. So if you're using fair value gaps, then you can use this on the lower time frame. If you use order block, if you use SNR levels, if you use anything, this is going to be on your lower time frame. So the higher time frame will set the direction and will make sure that you're entering within a valid range. The lower time frame, which is the entry, you're going to be looking at your own level that you're mastering. So for example, if you're just the best with fair value gaps, then that's the thing you'll be using. Now, these are the time frames. If you spot a daily directional candle, then you'll be using the hourly for your key level. 4 hour will go with 15 minute, hourly with 5 minute, 15 minute with 1 minute. Now, if you notice, as we go lower, we have more trades. Here, it's more about swing trading, day trading, and then scalping. So just pick the time frames combination that works with you and with your trading style and also your psychology. Okay, so let's start with this first, identifying the directional candle. Learn first how to identify one, and then also focusing on the high probability ones, because not every single directional candle is valid and we need to trade from it. No, we need to focus on specific ones, and that's something that we're going to be covering after the examples. Now, this is a 4 hour time frame, meaning that if you go to 15-minute time frame, you'll have more directional candles, and if you go to the daily, you will have less. But the quality also matters. Now, what do we need to see in a directional candle? Two things. We need to see, for example, I can see one here. We need to see a weakness at the high and then a breakout structure or strength below the low. In this case, we have in just 2 candles, or if you just focus on this, it's going to be only 1 candle. So in 1 candle, 2 things happened, a weakness and a strength. And this one tells me that this is a strong candle and we might be having a continuation from. Now, if we go here, you can see we have another one here. If you focus on more pairs, you'll be having probably few opportunities a week. Now, notice here, we have a weakness and a strength. This candle tells me that we'll be having a continuation after it. And notice what happened. We just continue lower. If you switch to daily time frame and then look for another one, now the opportunities would be less here. But I can immediately see one here, which is taking the previous candle high, closing below, and then notice the next candle, continuation from it lower. So now let's cover the examples with the steps. Now this is the daily time frame, and notice how we do have an imbalance here, and we also have a high that is inside of the imbalance. This is, if you know, a key level that I've been using for years now. A high that is inside of a key level, in this case an imbalance. We take it here, but we don't confirm that we have a reversal, and in this case we do have a directional candle. Look at the opening price of this, because a lot of the time I want to see, based on the directional candle, I want to have an entry above closing price and the next candle opening price. So I want to see simply an entry above this. I'm not going to enter here, even the price position is not the best. Now in this case, this is where I'll be looking for an entry. And we already identified the directional candle in this case because we're using the daily time frame. You go to the hourly because that's the right time frame alignment. And here comes your preference. So if you use imbalances for your entry, and I want you to every time focus on your key level. So what is one key level that you think you're good with identifying and entering from and refining? So for example, if we take in this case an imbalance, then this is the extreme imbalance, 50% maybe around here. Actually, we can enable that 50% level. So you go here, middle line. So we could maybe take an entry based on the 50% of this, because I know that price is gonna, a lot of the time based on our probability that we're trusting here, is that it's going into or inside the directional candle, and then we'll be having a continuation from. And notice what happened here. We do have an immediate weakness and strength, a breakout structure. So in this case, this tells me that we do have a high probability range from here to here. A high probability range is a range, swing high and a swing low, where we'll be having a continuation from. So if it's a bearish one, we'll be having a bearish continuation. If it's a bullish one, we'll be having a bullish continuation. So in this case, simply what I'll be looking for is a sell from here, so plus above, and then you either target the low in this case, which is going to give you only a 1.5 to 1. That's very low. And in other situation, we'll be looking at the next low, because in this case we're actually going bearish and we have multiple breakout structures. So in this case, I'm looking for another breakout structure also lower. Now some people would have another entry, an SNR that is inside also this imbalance. We had a lot of opening prices where prices rejecting and then rejecting and then rejecting. It's always rejecting by the body. So in this case, I can just say, okay, you know what, I'll be taking an entry at the 50% of this SNR. Now SNR is something that is very subjective. However, in its school, we focus only on one specific thing, which is a wick. We always enter based on wicks. And that's something that you can learn just by watching the Edgemodo 2.0, the new class. Price goes up into the 50%. So now in this case, if you're more into, actually, if you take just the entry based on the SNR, but not the 50%, you'll be in. If you enter based on the 50% of the imbalance, you'll be exactly like a snapper entry here. You can switch also to the daily to see if this is a valid one. Now in this case, yes, price can come here. Maybe I'll take it here. In the price action, it takes some time, getting very close to take profit and then breaking below. So that is one example where we use an imbalance. Now this is an example on the 50-minute time frame, and I was noticing this and actually tape reading this live, and I said if it works, I would actually explain it on YouTube. Now notice how from the start of the day, did we have any valid directional candle on your radar on this day? Not really. Now go and notice everything here. There is no valid one. Actually, I can see one here now. So we don't have a breakout structure and then before it a weakness. Let's cover this first. Taking the previous candle high, closing below the low. Now, because we're using, and the wick here is very small, so we can use the whole thing in this case. 15-minute, meaning that we would go with 1 minute time frame as our lower time frame. In this case, or in this example, we're going to be focusing on 705 or 618. Actually, let's take 618 as our entry. So something as simple as this. We're going to be selling from 618 and then a stop loss above. Or if you trade order blocks, SNR, whatever, you can have an entry here because this is a strong key level, and then look for the continuation from it. Just stick to 618 for this example or for this. Now price goes higher, very close to the SNR here or the order block, and it just continued lower. So in this case, there is no entry. Now going back to 15 minutes. So this is a valid directional candle, but no entry given in this case. In the price action, there is nothing that we can see here. And actually there is one here. So this is a valid one, taking the previous candle high, closing below the low, even though this wick and the structure itself might not be the best, but we are bearish. So you could be looking for another breakout structure just below this. Here is our directional candle. It's the whole thing, but the entry needs to be above the opening price. In this case, we go 1 minute time frame. And what did we say? We just want to look for. Now in this case, this is 50% of this is actually a valid level to look for continuation from. We do have multiple imbalances. In this example, we're looking at 618, or if you want, you could stick to 1 or 705, or you could, use your experience to know where price might be going to. Now in this case, I might go with 705 because it's almost the 50% of this imbalance. So I might go with this. You could stick with this to make it more mechanical. For me, 705 might be a good option here. And then looking for the next breakout structure and maybe just a 3 to 1 in the price action. 705 exactly, weakness here and then breaking below, and it actually continued lower. So this was a huge almost 5 to 1. Now this is an example on pound yen, and this pair has a lot of directional candles patterns because it moves so fast sometimes that you can see that you take a high, you break below a low, all in one single candle whenever you have the volatility required for the specific pattern. So we can see it also happens here, and then it gives us an entry. You might be able to enter based on this or maybe not. Now we do have also another one here going higher, and we do have one here going lower. Based on your experience, you could also decide which one you'll go with, because sometimes why not take this one and take this, and why not avoid this and maybe take this one right here. So if I have this and then price give me another one going higher, which one would I take? That's a question I would answer after this example. Now in this case, we'll be taking this one. I would go to 15 minutes to look for my entry, and in this case, feel free to apply your own key level. In this case, I can see clearly that we do have a strong breakout structure. Some people would see this as an order block. This is an SNR level, a key level. If we just take the same approach as last time, maybe because you don't have something clear, a fib, and you can clearly see that 618 and 705 is almost around the same area I'm looking for. So we could use this as a confirmation or as a confluence, and then I would be taking a trade based on this, and maybe at the next low that's a 4-to-1, playing the price action. Sniper entry here, if you notice, it did not reach this low that I was looking for, but it react almost at this range here. So this key level here, price reacted from. Now if you saw this in real time, you could either scale out or just exit right there because of this rejection or because of this big candle, the momentum candle. So you could be out here, or after the retracement just say, you know what, I think price is about to reverse, so you exit there. Now, what's the one thing that if we do, we'll be actually avoiding a lot of losses? It's not just focusing on the specific pattern itself, but where it's reacting from, where did it reach, and is it still valid to continue from it? For example, this is a valid pattern, right? This is taking the high, breaking below the low. Now, if we zoom in here, notice how strong or how big this was. Price going lower, and then slowly going higher, and how many candles it took to just come back to maybe our entry, maybe a few days. So this one is not valid also because of the rejection here. If we have a directional candle that goes like this, it goes lower and it reacts off another key level, and then we have another directional candle, this one becomes invalid, especially that it could work, but it's not the highest probability one because we already changed the direction here. So that is one example of a rejection, a big one, so it's already reached a lot of other key levels and it's not valid. Otherwise, if it was this small and we have a retest immediately going lower, this is going to be more valid. For example, this one. So if this was a directional candle, like closing below here, going lower, I would not take an entry here, even though it gave a reaction. Overall, I would not take this one. And the reason is very simple. It might be actually already reaching a key level, a strong one. And in this case, yes, it was reaching a key level and rejecting from. So the direction is changing. However, this example that we took, notice how it goes lower and then immediately retracement to continue lower. If it was not retested here and we already reached this level, I would not be looking for a continuation from it no more. That is the difference. So that's it for this video. I hope you learned something new and I hope this strategy is very clear. If you want to learn my 1 week trading strategy, then feel free to check out It's Cool to learn and trade with me. Make sure to like, comment, and subscribe to the channel. That's it, and I'll see you in the next one.